Hello, welcome to AntKast by Ant Group. It's a podcast that brings you deep into conversations with global thinkers, innovators, and entrepreneurs on groundbreaking technology and how they're shaping our lives for better or for worse. I'm your host, R.T. Warfield, coming to you from London. We are now in the second half of 2022, and the world of fintech has been evolving ever more rapidly with blockchain technology, artificial intelligence, and machine learning. Some say that 2022 may very well be the year of blockchain, with Web3 and its subsequent applications like Metaverse becoming ever more accessible. To understand some of these exciting developments, we have invited Dr. Efi Pylarinou to share her insights and talk about some of these trends today. Dr. Pylarinou is a B2B global fintech and tech influencer. She's considered one of the top global women influencers in finance, a top digital futurist, and top LinkedIn and Twitter voice. Efi is also a seasoned Wall Street professional and a recognized technology thought leader on innovation topics. She is based in Switzerland and is the founder of Efi Pylarinou Advisory, servicing big tech, financial services, and fintech clients. She strongly believes in building bridges between the old and the new economy. She shares her passion of content creation with more than 190,000 followers on LinkedIn and nearly 20,000 followers on Twitter. Welcome to the show, Efi.
Thank you so much, RT, and thank you for the wonderful introduction, and congratulations on being able to pronounce absolutely perfectly my last name, which is not easy, right? I mean, we Greeks, when we don't understand something, we say it's Chinese to me, and the Western world, when they don't understand something, they say it's Greek to me, right?
That's right. That's right. I had Greek friends and I asked them, what do you say? And they said, yeah, it's Chinese to me. So, yeah. But no, Greek's a beautiful language and you have a beautiful name. So apart from that introduction I gave you, I don't know if I give you full credit for all that you've done. Can you maybe tell us a little bit more about yourself and your interests?
Well, I mean, it's been a journey that started with my passion in mathematics and then in finance, when finance was not really a separate field from economics. It was just emerging as a separate field. And then on to my Wall Street experience that was spent in fixed income structured products and mostly in emerging markets, Latin America, as I was working in New York. And then I moved into the hedge fund industry in the late 90s when that was the democratization that was happening in capital markets. It was the first wave where we had digital tools that enabled people to do things that were only possible in large institutions. And then later on through my career, I did all sorts of different occupations, if you want. I taught at the university. I developed the digital courses for the CFA. I've always been very curious about innovation, about new products, new business models, and I've always tried to move towards that direction and in between the theory and the practice. And I must say that after that, the crisis of 2008, it was clear to me that the financial industry was in a, if you want, moral death spiral. It was becoming extremely regulated, extremely non-innovative. When I started my career, all the innovation, all the bright minds, the human capital, if you want, was within Wall Street, within the industry. And slowly and gradually that changed. And fast forward to today, where we've gone through a decade after the 2008 crisis of human capital innovating outside the walls of financial services, or if you want, the walled gardens of financial services. And now we are in that intermediate phase of rebundling, M&A, incumbents innovating themselves and so on. And I'm sure we'll have the opportunity to talk about that during our discussion.
You mentioned your time in the States. I know you got your PhD there as well. Do you see any major differences between the U.S. approach to innovation versus Europe?
100%. And I think nothing has changed on that front. In my mind, Europe has been and continues to be the region with very progressive regulation, regulation that opens up market opportunities. PSD2 is one of the most well-known regulations that has opened up the culture of open banking and later open finance, whereas the US has always been more innovative in terms of the technology. And I would say I would bring in China into the picture, as China has been very innovative recently, the last, I would say, at least 5 years in terms of the business model in financial services. So I like to think of those sort of big picture differences. And if we look at open banking, the regulation came out of Europe, was born in Europe, and continues to be, to evolve in Europe. But it is the US that has open banking, not in the regulatory sense, but more in the market sense, and has adopted more of those practices. We see more fintechs, that have grown the API system and have applied open banking in practice and grown fintechs through open banking.
So do you think these different approaches and these different regions, that they can learn from each other, learn from the other regional approaches?
100%. I mean, it is clear that the West is, if you want, fascinated with the super app business model that was natively born in the East, in China, and now in Southeast Asia. And we not only try to adapt it, copy it, see if we can build it, but clearly we have been looking to learn from that business model. I mean, today, PayPal, for example, is aiming to become a super app. And if I look at the different regions, the Middle East, Africa, Latin America, there is that culture in the air. Can we replicate the super app business model, its network effects, the ecosystem, and so on? Adopt it, because we could be talking hours about the difference of the specific implementation of a super app model in China versus what could happen elsewhere. But it's definitely inspired a lot of innovation in the West.
Yeah. So you and I had the great good fortune of being at Davos, the World Economic Forum, and I got to meet you there. It was fantastic a few weeks ago. And I was wondering during your time there if you heard or saw any interesting things from the WEF this year in terms of the fintech industry.
Always. Davos is always an exciting place during the WEF, and it was a great pleasure to meet you. It makes such a huge difference when we are able to meet in person. I mean, for me, this was my fourth participation at the World Economic Forum, and at Davos, and the last one was pre-COVID in January 2020. I must say it was a very odd feeling this year, as it was misplaced in terms of the season. It was spring, whereas it's always in winter. I mean, the 3 days that I spent up there were very intense, and there's a couple of, I would say, takeaways that have stayed with me even after these weeks. First of all, I'm always thinking about gender equality and observing what's happening at the WEF. And from talking to a few women's groups, I'm part of a special group called the 100 Women in Davos. These are women that attend Davos and come from different areas. And they were telling me that the participation of women at the WEF was 25% in 2020, which is really a relatively high number compared to other events at that level. And I'm talking about the participation within the leader summit, not the peripheral. So that's very encouraging. The other takeaway, and I've heard it from so many people, and you probably felt it too, RT, there, is that if you looked at the side events around the WEF, that were so many, from corporates, from governments, from NGOs, they were dominated by blockchain events. Blockchain on all sorts of levels, whether it was around sustainability, rethinking money, just blockchain as an infrastructure was all around the air in Davos. Crypto made it in the WEF, in the G20 group. This was the first year that leaders from the crypto space were participating in the main events. And in the peripheral ones, I mean, I can share some thoughts around the sense that I got, which was that really crypto has shown to the financial industry that there are better rails and better UX experience, especially for cross-border payments, than what we have now. RT, what we have now, let's call it by its name. It's a message-based cross-border payment system. I'm referring to SWIFT.
SWIFT, yeah. So maybe not everybody knows what SWIFT is. Do you want to give a little brief explanation what that is? Yeah.
Yes. SWIFT is a network that includes, I believe, over 11,000 banks internationally. And these banks use the SWIFT messaging system to be able to process payments. So SWIFT is processing payments, sends a message to Bank A and Bank B that are trying to process a system, and that is how payments are processed through this international organization.
And this has been the dominant way of doing it for like almost 50 years, right?
100%.
Yeah.
And it is the dominant international system, and its weaknesses are apparent, especially in correspondent banking and cross-border payments. So in a way, I like to think of blockchain as an infrastructure, as a healthy competitor to the existing correspondent banking infrastructure that basically, if you want to, let's say it by its name, it's a monopoly. It doesn't have competition, right?
Right. So why has it been so dominant if you think there are limitations to it for the last 50 years? What is the reason?
Because it's very difficult to build these networks.
Okay.
It's extremely difficult to build these networks. And that's why the rents, if you want, in correspondent banking are really high.
Okay.
And, why do we innovate? We innovate, if there is a need to do so, of course. But the truth is that we start from lower hanging fruit. So, innovators don't typically go to innovate at the infrastructure level. It's very hard there. It's a chicken and egg problem on how to scale. It's easier to start innovating like we've had at the user experience level, at the app level, and then we start going, middle office, back office, infrastructure at the wholesale level. Here, Swift is infrastructure, if you want, at the wholesale level. If you look at fintech, fintech started innovating really at the consumer level because it's easier to do that. So, back to Davos, I wanted to add to what we said about crypto and the thoughts around the infrastructure. There's a couple of other impressions that I got when I was in Davos. There was a substantial participation from institutions like the Bank of International Settlements, big regulators, academics. So that means that we have increased understanding about this space, about cryptocurrencies, DeFi, blockchain, and so on. And even government initiatives. For example, Switzerland announced the Home of Switzerland, which is a government ecosystem initiative around blockchain, not only blockchain for finance, but blockchain in general. So that gives you, a sense of what is going on. A couple of other items that struck me from the meetings were the fact that there remain huge imbalances in terms of where capital, investment capital, innovation capital, where it is allocated. One of the figures that struck me and has stayed with me is the fact that over 70% of global investments go to 31 cities. So think of that picture. How many deserts, if you want,
right,
on the globe we have where there's no capital pouring in.
Right.
So that is a picture that shows the inequalities, shows how we don't have fair distribution of capital and investments. And then add to that even in this day and age, we have internet deserts that remain high, even in the US, a developed country. And that again shows that there are people that don't have access. So these two sort of, I would look at them as extreme items. We have problems that need to be solved at the infrastructure layer for payments. Payments remain core of any economic activity. That is a given. It doesn't matter, whether we're using mobile wallets, cash, crypto, CBDCs. Payments are core. So we need to we have a lot of work to do at that layer.
Mm-hmm.
And it has to be done at the infrastructure layer now, not only the front end. And then we have these issues of where capital is flowing, internet access, and so on.
Do you have any suggestions, or did any come up about this imbalance of capital allocation that you're talking about? Like how this can be resolved, or the access to internet?
Well, I mean, there are initiatives about, the access to internet. There are initiatives that are about satellite or drones. Again, it's infrastructure that needs to become available, and it requires the collaboration of the public sector and the private sector.
Right.
And an intention, RT, the intention is what matters at the end of the day. I mean, we have all these technologies and we continue to develop more technologies. But what is our intention? Is our intention more accessibility? What is our intention? We talk about financial inclusion, we talk about sustainability, across supply chains, we talk about climate risk. There's so many issues. So we need to become very clear where we are, what we are targeting.
Right.
We need policies that encourage these goals, and we need more longer term strategies to implement these and see them to fruition.
Exactly. So let's talk about how the pandemic has, deepened the gap of inequality worldwide, and, the future economy calls for more innovation to address that. So what is your take on the issue of innovation in terms of helping make, the economy more equal for people?
Well, there's several thoughts to share there, RT. I mean, we already mentioned this issue of access to the internet, basic access to the internet.
Yes.
I mean, we still have significant gaps there worldwide, either because there are deserts or because it's extremely expensive. That's another way of measuring inequality. The other very important aspect that is a measure of this gap of inequality is in terms of digital skills. We live in a world that so many people lack digital skills.
Right.
And we need to focus more on upskilling people. Otherwise, we're leaving people behind with this accelerated pace of innovation.
Right.
People, large groups of people that are actively participating in the workforce, and not only, even those that are not, are left behind. And that feeling and sentiment is extremely damaging and dangerous.
Yeah.
Because on the one hand, we are creating more opportunities, but if we don't upskill people and workers, there'll be frustration and they won't be able to take advantage of these.
It's a waste of human capital, isn't it?
Waste of human capital, increased problems, especially for small businesses. I mean, think of it. Small businesses suffer more because they can't offer reskilling and upskilling to their employees. And on the other hand, they need these skills. They need, for example, cybersecurity specialists. They need workers that understand data and data analytics. So we have a lot to do in terms of upskilling people and the workforce. And this really requires a huge collaborative effort between governments and the private sector. It can't be done alone. We need digital skills, whether it's around artificial intelligence. As I said, cybersecurity is a great example. The gaps are also increasing because the demand for these skills is increasing and the supply is stagnant, if not reducing. So there I see that these mismatches need more attention. I mean, if I look at Europe, RT, where I live, I must confess that to this day, vocational training is viewed as a second-class option for students. This is a cultural issue. And therefore, students either go to universities where universities don't have adapted curriculums that are, incorporating the digital skills needed, or we don't have enough focus on this type of vocational training that needs to be done. And, we need to train the teachers at the colleges, at the universities, everywhere, and we need to educate everybody as to what is needed. There's a misperception on that front too. Like, what does it mean to be upskilled, to have digital skills? How do you measure it? What is needed in the market? We are at a stage where there are so many needs that there isn't one package. Here it is, and then you're certified for life in terms of digital skills. It's a continuing process, and you even have to specialize in certain areas to meet the needs of the market.
So you had mentioned just now about buy now, pay later service, which is an example of embedded finance, which you mentioned actually in your May article titled Fintech as a High-Tech Band-Aid. Another innovation that you've mentioned in an article is earned wage access, which is a way to grant wages to workers as soon as they earn them or sometime earlier as needed. So what are some of the contributing factors leading up to these innovations, and how successful have they been?
As the title of the article that you mentioned shows, a lot of these fintech innovations come to patch a need that is really at the point of sale, if you want. So it's a Band-Aid. It's not at the infrastructure level.
Right.
If I look at the example of, there's a need for early wage access, clearly. I mean, sad facts. I've recently seen figures, RT in the US, that I don't remember off the top of my head, but a percentage of over 40% of people that earn over $100,000 annually live paycheck by paycheck and need frequently early access to their wages. Now think of it.
Can I just ask you a question quickly? So I know what earned wage access is, but maybe the listeners might not know the process of how it works. What is it? What is involved in it? Yeah.
Let me explain how it works. And we'll take the US as an example. Wages are paid either bi-weekly or monthly. Ideally, we'd like to live in a world where you have instant access to your wages, whether that's hourly or daily, right? But the reality is we're talking bi-weekly or monthly. And these early wage access programs are either offered by your employer. So your employer lets you have your monthly or bi-weekly paycheck a few days earlier if you need it, and the cost of that is absorbed by the employer. That's one form of early wage access. Another form is It's not offered by the employer. It's offered by an independent fintech. And there's typically some cost, a fee, and maybe they give you a certain percentage, like up to 50% of your wage. So there's a need. People living paycheck by paycheck and needing early access to their wages. I hope this explains.
Yeah, necessity is the mother of invention, right? So there was a need, and
exactly.
there you go.
And why do I say it's a Band-Aid?
Yes.
Because given the technologies that we have today, we can easily see that we have the tech to provide your wage in real time. And whether you're an hourly worker or a consultant or a gig worker, or you're a regular salary employee, you should be able to access that. The reason you aren't, it's costly to the system that is batch processing. Companies are using these salaries as working capital, and on and on. I don't want to get into those details. So that's one Band-Aid that I referred to. And hopefully with digitally native money and digital identity, we could solve that problem. You also mentioned the buy now, pay later.
Yeah.
Here, I want to say feature, in the sense that buy now, pay later, as you correctly said, fits into embedded finance, because basically it's all about when you're shopping, at the time of checkout, at the time that you have the choice of the form of payment, the merchant offers you the option to pay in installments, depending on the form of buy now, pay later, exactly at the checkout. We're not talking about afterwards. It doesn't come in the form of a credit loan and so on, but it is. So what's happened there is, this is an innovation that is genuinely a marketing innovation to help merchants acquire more customers, or for the existing customers to help them increase, if you want, the size of the shopping cart. So make me buy more by giving me this, offering me this payment option, in installments and so on. So for me, buy now, pay later is an innovation at the marketing level for merchants. And that's why an example of such a fintech is Klarna, one grown-up one. And it's really built around a digital shopping business. You enter into Klarna, it's an aggregator, it's like a digital mall, if you want. And there you have the buy now, pay later, basically an offering of the merchants that are there.
So earlier in the conversation, you brought up the topic of cryptocurrency, and I know you've been involved in the cryptocurrency space from early on, and there has been a lot of discussion recently around the current market volatility. So how would you analyze the current developments in cryptocurrency?
Okay, I mean, you said cryptocurrency volatility. I think you're being how can I say, very diplomatic about that topic. Let's call it the current crypto crash.
Well, okay, yeah, I'll let you say that.
Yeah. Yeah. This is a meltdown.
The meltdown. The meltdown's a good word. Yeah.
Look, I mean, I don't think that anybody would disagree that we will be seeing more regulation in the space, whether it is around private stable coins or crypto businesses in terms of what they can or cannot offer, especially anything around yield products,
Right.
given how this DeFi meltdown, unfolded, starting with Terra Luna meltdown and then going on to the recent bankruptcy of Celsius. I mean, beyond the regulatory clampdown that will come, this is an era or a stage that the sector needs to admit and self-reflect that they did not do a good job in terms of setting best practices standards. Why? Because in the DeFi space, there was huge competition once it started growing, whether it was very centralized ventures like Celsius or more decentralized ones like the MakerDAO. What others were doing, they were copying these DeFi initiatives and launching another one. And to attract consumers, they would offer higher yields,
Right.
like banks do sometimes, right? But because this is not regulated, there was no limit to these offers. And the new ones were offering higher yields and they were investing in the back scenes in other DeFi initiatives
Yeah.
or dApps, if you want.
Yeah.
So think of it, it was like a web of borrowing and lending
Right.
with no governance standards. So if one entity failed, then there was a complete ripple effect, like, the usual domino effect that's completely unmanageable. There are no stop breakers. Everything collapses once one entity falls. So, I mean, this is like what really happened in plain words. And right now, unless the DeFi players that survive can survive and want to survive and stay out in this vertical, because it is an innovation and there will be players, but they need to move and adopt best practices and not wait for the regulation to come down. They need to do that, to rebuild trust in the system and to present evidence that DeFi is recognized as an innovation.
Mm-hmm.
Today, as we speak, Goldman Sachs is looking to raise 2 billion to buy at a discount the distressed, if you want, assets of Celsius, this DeFi that went bankrupt.
Yes.
I mean, this to me, RT, is no different than distressed debt in the 2008 crisis.
Right.
Same situation. We are in a phase where it is recognized that DeFi and crypto are innovations.
Mm-hmm.
They have given birth to CBDCs,
Yes.
right? That's a derivative, a brain derivative of crypto. Universal basic income initiatives are also a child of crypto. The JP Morgan settlement coin that we mentioned earlier, it is also part of the family. The resilience of a faceless network like Bitcoin, I mean, it is acknowledged that this is an innovation.
Right.
And on and on and on. And, we can talk about DAOs, decentralized autonomous organizations. The fact is that I like to think of DeFi and crypto as a distributed research and development ecosystem or lab ecosystem for financial services. It
Oh,
has
okay.
offered a lot of value.
Mm-hmm.
And I don't use the word decentralized. It's distributed. It's all over the place. There's no coordination, and it has offered a lot of innovative value to the ecosystem. And through this crisis, I see that incumbents are going to take advantage of it and move forward. The best example for me of this is JP Morgan. That's been one of the most aggressive in the good sense, incumbent player in the blockchain for finance space, more than 5 years. And they are involved in all the pilots around tokenization in most of the pilots of CBDCs in France, in Switzerland, in Singapore. They're talking now about looking to tokenize money market funds, to tokenize US Treasury bonds and use them as collateral on DeFi networks, permissioned DeFi networks, because this is institutional level. So we have gone through an era of distributed research and development for financial services through DeFi and crypto, mostly done through retail, recently institutions. At the end of the day, the institutions are going to benefit from this in the sense that they will replace their infrastructure and the capital markets will become more efficient. That's the way I see it. Like with everything, out of any crisis, some good things come out.
Well, on that note, I would just like to say thank you so much for your time today. I could keep you on for another 5, 6, 7 hours. Pick your brain. Amazing conversation, and I would like to have you back to discuss some of these things further.
Thank you so much for having me. It was a great pleasure.
Thank you, Efi. That was top global fintech influencer and founder of Efi Pylarinou Advisory, Dr. Efi Pylarinou. Thank you very much. That's it for this episode of AntKast. To make sure not to miss a single episode, please subscribe on iTunes or Spotify. I'm RT Warfield, coming to you from London. Thank you for listening. Bye for now.